This is an Uncovered Japan Company research report on Ubicom Holdings, ticker 3937. Ubicom is a Japanese small cap with two very different businesses, a high-margin medical IT franchise and a larger Philippine-linked technology consulting operation in transition. This report examines the regulatory software moat, the consulting AI pivot, the cashback dividend, and the evidence investors should follow. The starting snapshot is a small company priced at 10.9 times forward earnings and 1.9 times book value, with a 4.2% dividend yield and forecast return on equity of 17.6%. Those metrics do not settle the investment case. They frame a company whose earnings quality comes from a small but exceptional medical unit, while its larger consulting business is being deliberately reshaped. For customers, Ubicom provides two distinct services. Its medical business offers software such as Mighty Checker, which helps Japanese hospitals audit reimbursement claims, plus related data and implementation services. Its technology consulting business supplies enterprise development and offshore engineering, anchored in the Philippines. The essential distinction is economic. Medical is smaller in sales, but generates most of the group's profit, while consulting is larger, but structurally lower margin. This segment chart is the core evidence. In fiscal 2026, medical generated 33% of sales, but around 74% of operating profit, with a 62.9% operating margin. Technology consulting produced 67% of sales, but at a 10.6% margin. Ubicom should therefore not be analyzed as one uniform IT company. The medical unit is the profit engine. The consulting unit is the swing factor that determines how much of that quality the market is prepared to recognize. Ubicom's medical moat is not generic software. It is deep, continuously updated knowledge of Japan's medical reimbursement rules, embedded in hospital billing workflows. Claims must be correct, or providers risk rejected or reduced payments, which makes switching costly. The company combines that regulatory knowledge with recurring maintenance and usage fees and a lower-cost Philippine development base. The practical question is whether that narrow, high-margin franchise can broaden through cloud products, electronic health record implementation, and insurance data services. Over 5 years, revenue compounded at about 6.1% through fiscal 2025, then declined 5.5% to 5.99 billion yen in fiscal 2026. Operating profit was nearly unchanged at 1.30 billion yen. The report attributes the pause largely to a deliberate reduction of lower-margin consulting work and M&A-related costs. Before those M&A costs, operating profit was 1.379 billion yen, up 4.9%. That interpretation needs ongoing evidence, but it distinguishes a chosen transition from a simple demand collapse. The report urges investors to anchor on operating profit and cash rather than a single year of net income. Medical sales rose to 1.949 billion yen in fiscal 2026, and its margin remained above 60%, while net income has been affected by foreign exchange, equity method results, and tax items. The chart shows that the operating business has been steadier than the bottom line. It also reinforces why the segment mix, rather than consolidated headline profit alone, is the more useful starting point. Ubicom's balance sheet is a central counterweight to its transition risk. The report puts the equity ratio at 75.5%, describes the company as effectively debt-free, and identifies roughly 5.2 billion yen of net cash. Return on equity was 14.8% in fiscal 2026, with fiscal 2027 estimated at 17.6%. The cash supports dividends, selected acquisitions, and the consulting rebuild. It does not eliminate execution risk, but it makes the key risk more about time and delivery than immediate financial strain. Cash flow has been steady for a company of this scale. The report shows fiscal 2026 operating cash flow of about 980 million yen and free cash flow of about 930 million yen. Capital returns combine a stated 25 yen dividend floor with a performance-linked top-up. The latest dividend was 40 yen. The important qualifier is capital allocation. Management plans to use the cash base for medical expansion and bolt-on acquisitions. So investors should watch whether acquisitions add recurring, higher-value revenue rather than merely adding scale. The strategic bottleneck is consulting. Management is using IBM Watson X and engineer retraining to move the Philippine development operation away from a low-value man-month model toward higher-value AI-enabled delivery. The transition costs revenue before it can improve margin, because the company has declined some lower-margin work. That can work if consulting margins rise above their historic low double-digit range. It can fail if clients use generative AI to bring more software work in-house. This is the main uncertainty investors need to test quarter by quarter. The report places Ubicom near the bottom of its own valuation history, around 10.9 times forward earnings and 1.9 times book value. Its 3-year scenarios are the author's estimates, not forecasts or recommendations. Roughly 700 yen in the bear case, 1,360 yen in the base case, and 2,340 yen in the bull case, from a 951 yen reference price. The spread reflects a single practical question. Can the high-margin medical franchise keep expanding while consulting completes its AI transition without losing economic relevance? Ubicom combines a genuine, high-margin medical IT niche with a larger consulting business in the middle of an uncertain but potentially valuable reset. The balance sheet and dividend provide resilience, while the standard market demotion and a history of ambitious guidance keep the discount understandable. The balanced conclusion is not a recommendation. It is a watch list. Follow medical recurring growth, the consulting margin after the AI pivot, delivery against fiscal 2027 plans, capital allocation, and the company's investor communication. For the full evidence, risks, and valuation discussion, continue with the free Uncovered Japan Deep Dives. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.